Hello, everyone. Welcome to Bookkeeping Made Simple. This is the Bookkeeping Made Simple podcast. My name's Donna. I'm the owner and president, and today I'm going to talk about the Corporate Transparency Act. I've talked about this before. There have been some updates. I want to make sure to get this out. And before I get started, as by way of housekeeping, it's true, I have not been on here very much lately. Life has lifed. And I have had to put other things ahead of my business a little bit. That does happen from time to time. There's times when all I can do is take care of the clients that I currently have. We have done a lot of reorganizing to prepare so that we can have even more clients, because I firmly believe that the way to financial success is to help as many other people achieve their goals as possible. So in order to do that, I had to do some rearranging and reorganizing, and now we are back, baby, getting ready for 2025. And with that, I'm going to jump right into the Corporate Transparency Act. For those of you who don't know, the Corporate Transparency Act was passed in 2021, along with a whole slew of COVID era regulations or laws. And what the part of that, they sold this as a way to crack down on money laundering and other criminal financial. They sold this as a way to crack down on money laundering and other financial crimes. The vast majority of business owners in the United States are not criminal. They wouldn't know how to launder money, short of putting cash in a washing machine, People don't really know how to do this. It's just like, I'm like, most people don't know how to commit fraud and certainly don't know how to commit it well so that it's untraceable. So I felt like at the time I heard about this, I felt like it was an intrusion of privacy. Well, turns out, and I also felt like it wasn't fair to law-abiding business owners to have the burden of reporting on our shoulders. Now, FinCEN, and for those of you who don't know, FinCEN is the Department of the Treasury's Financial Crimes Enforcement Network. They estimated that compliance would cost $22.7 billion in the first year alone, and then $5.6 billion as long as it is a law. And I have, talked to people who say it doesn't take that long. Sometimes it doesn't, but the fact that business owners have to either pay an employee to do this, hire a firm to do this, or take time out of their own extremely busy days to do this, it's just, we're already staggering under regulation. So I didn't like it. I didn't like this law, didn't like having to tell people about it, didn't want to do anything with it, honestly. And now here we are, 4 weeks from the deadline, and a judge has issued a nationwide injunction barring the enforcement of the Corporate Transparency Act, particularly the beneficial ownership reporting. Again, I kind of want to go back because not everybody knows about this. The beneficial ownership is loosely defined as anybody that owns 20% or more of a company. 20% is kind of where you really start to have a lot of say in how the business is run. So if you're one of 5 partners, then each of you probably have 20%. If you're one of 5 partners and one of them has 50% and the rest of you have it split, then the 50% owner is the beneficial owner and the rest may or may not be. So they kind of look at who has the right to have say in the day-to-day operations of the business is really what it is. And that's what a beneficial owner is. It's also may or may not be the people who receive money from that business. So there are quite a number of lawsuits involving this. There are cases currently pending in the 4th, 5th, 9th, and 11th circuits. So people don't like this law. It is looking more and more like, and I said this from the beginning, it's going to end up at the Supreme Court. There's also the incoming administration may find a way to defang it. They may find a way to kill or at least dramatically narrow these reporting requirements. So we're kind of on a wait and see thing. But the rule imposed required the vast number of legal entities. Literally, if you filed paperwork with your state to start your business, like we all do, single owner LLC, $50,000 in sales, it didn't matter. You had to file a beneficial ownership report. And it just dumped us into a new bureaucratic net. I did not like it. I really don't like a lot of government overreach. And that means that most Main Street businesses, small businesses, mom and pops, and single member LLC may or may not have even heard of this. As an accountant, and I'm responsible for helping my clients, I didn't hear about it until just before it went into effect, about this time last year. And the penalties are devastating. So the penalties for not filing your BOI report were civil fines of $591 a day, not a month, a day, and criminal consequences of up to $250,000 and 5 years in prison. I refer you to the Eighth Amendment. So it is very heavy-handed. It is, and my take was, well, the businesses are registered with the state, and businesses have to file tax returns, which in the vast majority of cases include information on the beneficial owner. If you have any shareholders or partners, then that's going to show up. Otherwise, it'll show up on Schedule C of the 1040. If you, again, if you have a partnership or a corporate return, the beneficial owners actually show up on there. Now, if it's a shell company, if it's something where they really are trying to hide the owners, you might have to go down a few layers and figure out, well, this company owns this company, which owns this company, and oh, down here, way at the bottom, it was hard to find. That's who the owners are. So as of August, of the 32 million businesses in the United States, only 4 million had actually complied. Now, and in addition, a federal judge out of Texas had already issued an injunction against it because he was involved. He was the judge in a suit brought by the National Federation of Independent Business, or the NFIB, as well as the Texas Top Cop Shop and the Libertarian Party of Mississippi. And he found in favor of the plaintiffs, who were saying that they didn't think it was constitutional and they didn't think it was the government's business. And his opinion also strongly rebuked the Corporate Transparency Act for overstepping constitutional boundaries. Well, now we have another judge that has come out and given a nation. That case only pertained to members of the NFIB. Okay, so if you were a member of the NFIB, you won that lawsuit. There was an injunction against enforcement. That one is still pending because the federal government, of course, appealed. So an Alabama judge actually made this ruling and said members of NFIB do not have to worry about enforcement. He issued an injunction stopping enforcement for NFIB members. This new injunction stops enforcement for all business owners. And the reason for that, he says, one, we don't have to comply while this injunction is in effect. Now you can, nothing's stopping you from issuing those reports or uploading those reports to FinCEN. Some people may want to do that. I personally have not for my own business, so um, if you go to the FinCEN website, it says it may take 20 minutes or less. And I don't know about you, but there's days when I don't have 20 minutes. I have a lot of days when I don't have 20 minutes. And now it's there's an injunction against enforcement for all small businesses. Um, he stated, let's see, um, here are some of the concerns. One is many small businesses don't know about it. It has not been well disseminated. Like I said, as an accountant, I was expecting to start getting information about this through the Journal of Accountancy, through most of my trade journals that I go online and read. I was expecting to see it on my news sources. And I haven't seen very much about it. They haven't publicized it. And so it almost feels like it's a gotcha. Okay, so nobody knows about it. And now they cannot enforce it because they haven't done a good job of telling anybody about it. And the other problem we have is that FinCEN has already demonstrated inability to keep reports safe from leaks. So that is also an issue. The other reason that they think it's unconstitutional is that historically the states have been in charge of corporate regulation. In other words, if I want to do business in Utah, I go to the Utah State website and I give them my information and I tell them, I get a business license for Utah and make sure that I'm registered with the state because I have to be. But if I want to do business in California or Kentucky or Florida or any other state, and it's more and I have a lot of clients. There's a thing called a nexus. If you're in e-commerce, you know what this is. But if you reach a certain level of business in a certain state, you also have to register with their Secretary of State. Now in Utah, we don't have a Secretary of State. We do have a Department of Corporations, and so I register with them. But if I start doing a lot of business like in California, or if I start doing a lot of business in my home state of Kentucky, I would also have to register in that state. And that state they're required to make sure that I am complying with the laws of that state. Well, here comes the CTA saying, oh no, it's a federal matter. So I don't think this is going to pass the Supreme Court. So far, this has been going slower than I was expected, but it is following the path I expected. And I do think it will be struck down. So if you have questions about the Corporate Transparency Act, enforcement has been halted. Collection of data has not. If you would like to upload your own beneficial ownership information, you can do so at fincen.gov, FINCEN.gov. They do have options to fill it out in a fillable PDF. You can even attach your ID to that, and then you can upload it when you have time. Or you can do it all at once. If you're a small business and you're the only owner, it's pretty simple. If you are a corporation and you have a lot of shareholders, you have to figure out who has the day-to-day say, the ownership say. And just so you guys know, beneficial ownership doesn't mean most Main Street businesses, it really is. It's a one or two person part. It's maybe a two-person partnership. Maybe it's a husband and wife, or it's a single person. Maybe there's a partnership with two or three partners, but it doesn't tend to be very big in Main Street businesses. They can grow very big. And when that happens, the cutoff kind of is at about the 20% mark. So if you own 20% or more of a business, then you probably have a pretty good say in how that business is run. And so that is what's considered a beneficial owner, anywhere from about 20% to 100% ownership would have to be reported. Now, the 20% is a guideline. You may have a partner who's a silent partner who doesn't have anything to do with the running of the business. They just collect their checks. I'll talk later about what a beneficial owner is, but since this enforcement action has been put on hold, I will tell you, I've gotten emails from a few people saying, oh, it's on hold, but we think you should file anyway. I'm not going to give that advice. I am going to say, if enforcement starts up again, I will let you know. So that's it for today. I really wanted to get this information out. Enforcement for the Corporate Transparency Act has been paused, at least. We're waiting to see if the Supreme Court strikes it down. We're waiting to see the outcome of these other lawsuits in other circuits. But so far, the courts are not on the side of the federal government on this one. And that is it for today. Thanks for watching, and I'll talk to you soon.